Hello and welcome to this video on the Baillie Gifford Managed Fund. My name is Lucy Haddow, I'm a specialist on the fund and I'm joined today by its co-managers, Iain McCombie and Stephen Hay. They're here to answer the burning questions that as clients or perhaps prospective clients we know are on your mind. So Iain, first question for you. Lots of people want to know what the fund looks like at this point in time. So perhaps you could cover that from an equity perspective.
Sure, Lucy. Well, about 75% of the fund is in equities. And I think the really important point is it's broadly diversified. And I can say that in two different ways. Firstly, by geography, we split the fund into 4 different regions and we give the money to each of the regions to invest. So that's the UK, the US, Europe, and Asia and emerging markets. So no more than 20% of the fund is in each region, so well diversified. The second way to think about it is by stock. We have over 200 stocks in the fund and we're trying to find growth stories within that. But the largest one is only 1.6% of the fund. That's a company called Shopify. So again, very broadly diversified.
Brilliant. Thank you so much. Stephen, same question for you. But what would be really helpful is if you could bring into that conversation on fixed income, the impact of inflationary pressures, because they're dominating the headlines at the moment.
Absolutely, Lucy. I mean, there is a very strong inflationary dynamic right now. And I think there are good structural and cyclical reasons why we might see a period of sustained higher inflation. But it's important to remember the managed fund's been around for 34 years. It's seen periods of high inflation, deflation, market crises, and we have the flexibility in terms of finding investments that can weather these storms. But you're right, inflation is a challenge to bonds, and bonds are less attractive now than they were during the period of low inflation. So from an asset allocation point of view, we have reduced the weight of bonds in the portfolio and increased in equities. Now, but it's important to remember, though, that the bonds do provide a really important role within the portfolio, providing balance and reducing the overall volatility of the fund, which is what our clients want. Now, within the bond portfolio itself, we have been reducing exposure to rising bond yields by buying shorter dated bonds. We've also been favouring corporate bonds, and in particular high yield, where actually a bit of inflation can be quite helpful for these more indebted companies. So we are finding lots of good idiosyncratic stories. One of these is Netflix, which a company whose bonds we bought when they came to the bond market to fund their expansion of content. And as they've gained more subscribers and revenues have picked up, then they've hit that cash flow positivity point faster than we expected, and they're beginning to delever. The bonds are getting upgraded and the prices are rising. So although the overall backdrop for bonds may be less supportive than it's been in the past, we're still finding lots of attractive idiosyncratic stories.
Iain, Stephen talked just then about the fact the fund's been around for 34 years. We have seen plenty of trends and themes come into the marketplace over that period. The 3 letters on everybody's lips at the moment are E, S and G, environmental, social and governance factors. How do you think about those for the Baillie Gifford Managed Fund?
Oh gosh, it's a really hard one to answer, Lucy. It's such an important topic. But actually I'm worried about it in some respects because I'm worried that the box tickers are taking over. And that's not important. That's really bad news because actually this is a really important fundamental long-term trend. And as long-term investors, we've always considered it. But the trouble is there's so many people talking about it. And what about action? So let me do something different. Let me put my mouth where our money is. So to illustrate that, what I'm meaning is that we try to allocate our clients' capital to areas where we think there are growth opportunities. So 10 years ago, the fund had 12% of its assets in the oil and gas sector. Today, it's 2.5%. That's a huge drop. Now, why is that? Well, because Stephen and I and our colleagues are struggling to find the growth opportunities in that area. So we have divested and we put it into other areas.
That's a really great example. It really brings to life what we're doing with the Baillie Gifford Managed Fund. Perhaps you can add a little bit more to that in terms of engagement examples and perhaps the opportunities that you're finding as a result of these trends.
Sure. Well, Lucy, look, if you gave me a script, I'm sure I'd be talking now about lots of worthy engagements we're having with companies and, blah, 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 and box ticking. Now, we do engage a lot with companies. We've always done that, and we do it in an integrated manner with our ESG experts. So we think that's very, very useful. I'm not knocking that at all. But I do believe that is not everything that's to do with ESG, because a lot of people think about ESG as risk. We don't see it like that. We think about ESG opportunities. So let me give you an example of that. We've owned for a number of years a stock in the portfolio called NIB, which is a Swedish business that makes heat pumps. Now, I'm sure, Lucy, you've seen in the news recently that heat pumps have suddenly come to the front of the agenda as people are now talking about getting rid of gas boilers by 2035 and so on, and people are fretting about how that's going to work. Now, what I see as a growth investor is the fact that in the UK, for example, we've virtually got no heat pumps. We're going to have a heck of a lot more heat pumps over the next 20, 30 years. That's a great growth market. And for NIB, UK is just a small country. It's got the whole world to pick from because outside Scandinavia, nobody's really got heat pumps. So there's a huge opportunity of growth there.
Now, over the long term, performance has been absolutely excellent. There has been a bit more volatility in the short term. Volatility is an inevitability when investing, particularly in equities. And without wishing to dwell too much on the short term, I think a lot of people would find it quite helpful to get a sense of the outlook from here. So Iain, back to you. Could you talk a little bit about how you're challenging the ongoing investment case for holdings in the portfolio? And indeed, perhaps just touch on how we think about valuation.
Well, sure, Lucy. First of all, can I reassure clients that we don't dwell on the short term? We are resolutely long term in our approach. But valuation is incredibly important. And we do think of it differently to a lot of people. It's not about setting a price target and then when it gets to that price, we sell it. It's a much more dynamic process. What we're trying to say is at any point in time when we do a review of a company, where's the upside from here? Can we see that business growing significantly over the next 5 years? And a good example of that process in action recently was Amazon, which used to be one of our biggest holdings in the fund. And when we did that review process, we found that actually, although there's still growth potential in Amazon, we don't think it's quite as much as it used to be. And add on top of that, the significant management change that Jeff Bezos, the founder of Amazon, is now stepping back as chief executive, and we decided to reduce our holding. But the other thing I think is very important is the opportunities we're still finding in the fund. And Lucy, I bet you and I never thought we'd ever be talking about Marks and Spencer's in the Baillie Gifford Managed Fund because we've never owned it in the fund for over 20 plus years. Why was that? Well, because it wasn't a growth business. But we think that might be changing now. And that's really quite exciting because they've got the food business, which has always been good. They've got the Ocado joint venture now for delivery, which I think is going to be a tremendous growth opportunity. And you never know, maybe the clothing business is finally turning around under new management. So that's really exciting.
And Stephen, you've already talked a little bit about the opportunity set available at this point in time for fixed income. Perhaps you can bring this all together from a whole portfolio perspective to give a sense of the outlook from here and answer that question of, are you optimistic?
Well, Lucy, there's so much doom and gloom about, whether it's about COVID or to do with inflation or climate change. Now, don't get me wrong, these are big challenges and I don't want to make light of them, but I see these challenges as an opportunity for companies to help meet those challenges and bring us the solutions that we need to get through these problems. And we're seeing lots of exciting ideas. An example would be in the healthcare and innovation in healthcare. A company we hold, Recursion Pharmaceuticals, and it's using machine learning to develop new ways of discovering drugs, which is really exciting and potentially transformational. We've also got a company, Ashtead, which we've held for a long time, really good management and a great growth story. So still very exciting, even though it's been around for a long time. Now, balancing those exciting equity ideas, we do have a best ideas global bond portfolio and an allocation to cash. So lots of reasons to be optimistic. And I think that's why people refer to the Baillie Gifford Managed Fund as the one-stop shop for the best ideas in equities and bonds that Baillie Gifford has to offer.
Well, on that optimistic note, thank you both so much for your time. And thank you to you for watching as well. If you'd like to find out more about the fund, there's plenty of information available on the website, as well as ways for you to get in touch.